Bitcoin, patience, the companion of wisdom. In today's video, we're going to be looking for clues across the higher time frames for what is most likely to occur next for Bitcoin. Welcome to Bitcoin Escape Plan. If you enjoy the analysis and you want to support my work, then you can like this video and send it to somebody else who trades crypto. Let's get into it, guys. So, first and foremost, I wanted to highlight something that I talked about in Monday's video, that being this kissing candle setup over here that so far has been playing out. So I've been covering this entire range in my membership, the 4-hour break room. You can get more information about that down below in the link in the description. But a couple key things have happened with the price over the last couple of days. One thing that we have to pay attention to for later today, so I'll go over this more in tomorrow's video, is the NVIDIA earnings today. NVIDIA earnings after the market closes are going to be important. It is like everything is going to react to that. Traditional stocks will be closed. Bitcoin will probably have a reaction to that. So I would imagine that will be important based on whatever the daily close is today. We'll get to that in a moment when we get to the daily time frame, but on the 4-hour time frame, and we will take a look at this more at the very end of the video, we are caught right in between the middle bands of both the downtrend anchored VWAP as well as the elder VWAP. If you have no clue what I just said, go over here to courses. I explain that in more detail over there. But basically what that tells us is, I refer to this all the time, subscribers already know, these are magnetic forces. They're not concrete walls. These are closer to concrete walls, you know, where we either pass through it or we do not. These are much more like, they kind of give us an indication of the trend, and then it'll pull back sometimes in the opposite direction, and then we find that it actually has enough momentum to continue past it. You know, it's a much more kind of like revolving door than just a door that opens automatically for you. I don't know the right way to get this analogy, guys, but I think of those more as like magnetic forces that you can pass through that'll pull you back in the opposite direction if you don't have enough escape velocity. As well as, I would expect us at a certain point to reject these to the downside as opposed to continuing to the upside. If we presuppose that we're going to continue past these, that means that we have to trend towards the upper bands, which are considerably higher. You know, we're talking about 95.4K, 95.1K, and 97.3K, which for me personally, we have no precedence for it doing that in a bear market year. So there are a number of geopolitical things that may cause that narrative to ramp up. I may ramble about that a little bit later on in the video, but just broadly speaking, if you want my opinions about how war and things like that affect Bitcoin, that's what I wrote the book about. You can go read my book for free on the website if you put in your email at bitcoinescapeplan.com. That is one of the principal narratives, is war will shift back towards chapter 1 of that book, which is fiat inflation. And fiat inflation specifically, the floor of where Bitcoin will drop to will rise indefinitely, forever. You know, every cycle will have a higher low, essentially, than the previous one. And it's just a matter of how much higher that is this cycle that is really called into question. But before I get to the monthly time frame, let's go get our daily close. I'm already off to a rambling start, my friends. You guys already know if you've been here long enough. So yesterday's daily close is at about 78.5K, and this is pretty important. What did I just talk about on the 4-hour time frame, guys? We have the same information reflected on the daily time frame where we've gotten to that. This is specifically the bottom band, or the middle band rather, of the downtrend anchor VWAP, not the elder VWAP. But you can see the bodies of all these candles have closed below it, even when we've got wicks above it. So far today, we have not got a wick above it. So this is what I say in the email today, is that 79.4K I would say is the most important target for us to pay attention to the upside. And then I would say, broadly speaking, about 77.7 is the most important to the downside. I think the fib pivot on the 4-hour is actually 77.5, but it's pretty much the same thing, guys. We're talking about a couple $100, you know. But 77.7, I would say, if we're looking purely at candle data, is going to be slightly more important than 77.5. So those are the 2 points I would really pay attention to today. For anyone who trades traditional stocks or anything else, you know that if something is above the daily candle of the previous day, it's more likely to trend higher. If it's below the daily close of the previous day, it is more likely to trend lower. Bitcoin behaves the same way. That's a big reason why we're seeing a push down now. It's because we got rejected off of that middle band of the downtrend anchored VWAP. Then it broke the body of the candle, formed below the body of the candle, and that is what is putting downside pressure again towards that 77.7K target. It's the first thing I would look for. Oh my God, let's go to the monthly time frame. So this is important. This is different from yesterday. So specifically the middle band of the downtrend anchor VWAP, we have dropped below that. The body of the candle is forming below that. Now I still think in general, the month will trend back towards 76.3K before we close the month. However many days we have left in the month. It can't be that many now. What do we got? 5 days left? Yeah. So not that much longer for us to get a candle close in relation to either the middle band of the downtrend anchor VWAP, in this case on the monthly time frame, as well as a 76.3K Fibonacci pivot, which everybody on this channel knows I never shut up about that. That's been our best friend for several months. Super, super important for understanding the upper side of the range that we've been stuck in. And I am still biased towards us correcting after this rather than just going on the principles of a bear market year. So on the principles of a bear market year, if we are getting this close to a key indicator and we reject it, the price is going to behave negatively on that news. It might not be an immediate drop overnight, but it will in general start having us ask the question of, okay, well, how much of this previous candle is support versus how much of it do we need to give back and find where we have resistance levels down here, which for me, you guys already know, one of the key ones in my opinion is about 73.8K. I think that that's going to be very important. More so I think on the weekly time frame than on the monthly time frame, but that's just the highest point from the March 2024 rally from the ETF buyers. So psychologically speaking, the largest cohort of individuals, as represented by the anchor volume profile over here, that is telling us that those people will at least remember that price. They will remember the story around that price being that was the highest that Bitcoin could go there. So it would be the same thing as on the way into this, people were talking about 69 and 70K because that was the highest it had previously gone to. So that was kind of the upper ceiling of where we could perceive the price was going to go. The same way that I think 73.8K is the same level of importance as 100K is essentially. Not quite, like I would still say 100K is more important, but 73.8K fulfills a similar requirement of being at one point an all-time high in a unique position where there had not previously been an all-time high in the earlier half of the halving year. That was a major divergence at that time. I was not making YouTube videos back then, guys. I was just using my own system. Anyways, so what we would expect to see, first of all, we got two things we got to pay attention to on the monthly time frame, given where we are in a bear market year, which is that, typically speaking, subscribers already know this, we got about 3 to 4 green candles in a bear market year. That is the normal, that is what we have seen in every other cycle so far. This is also the first time that we have seen 2 consecutive green body candles in a row in a bear market year. We have had a pair multiple times before. We have not had 2 pairs. That is pretty important. I think a lot of that is just based around the treasury narrative right now. I do think that that eventually corrects, guys. I'm starting to accept the possibility that it may be later than I anticipate, and I'll show you my example of that over here. Now, I don't have the exact geopolitical things pulled up for this time period, but I do think that this 2019 fractal is going to be very important at some point, where we had suddenly a sharp reclaim of the monthly SMA itself, which I'll get into in a moment, and then the price still reverts back to the midpoint, despite a major reclaim above it. So for us, this would be the equivalent of the price going back to, I mean, we're not, if you add a zero to this, we're not going to $138,000, but say closer to like 115.7K or 108.6K. 106.8? 106.8, that's what it was. Those being, I would think, more critical levels at that time for us to get past, as well as in that particular case, getting past 100K psychological barrier. We would just barely get past the 100K psychological barrier before, in that instance, still giving it back up. So it is very possible that we do that just earlier. You know, this run really started in about Q1 of 2019. I still have my biases towards that just because that's what the law says, is the stablecoins actually come into effect January 18th of next year, according to the Genius Act. That's when the banks kind of have to start moving forward with whatever they've decided based on the legislation for providing stablecoins to their customers. So I think all of this is just like hullabaloo and bluster to keep people distracted from that fact. I think obviously the narrative of the U.S. buying Bitcoin on a recurring basis is important, but they've been saying that since 2024. So for me, what is actually important for the major volume change is those stable coins. Is once the stable coins become available, that's trillions of dollars that gets onboarded into crypto overnight. And a lot of it, I think, is actually going to go towards car loans. It's going to go probably towards fucking robots, you know, those like Tesla robots or whatever. I guarantee you that the banks will have a whole slew of initiatives around being able to borrow in order to purchase those. That's what they're going to want. They're going to want you to buy mortgages, car loans, etc. But right below that, they are going to have a direct incentive for you to buy Bitcoin because JP Morgan Chase and everybody else is going to want to custody it for you. So I do think it's like a downtrend effect where a lot of the narratives that they're talking about, like the $1 trillion worth of buybacks, and I'll get back to the technicals in a second, guys. Just let me ramble for a sec. The $1 trillion worth of buybacks is super important. In the short term, that will have an effect on the bond market. We can't deny that, you know. But we still have to think about the larger overall narrative, which I thought about this because of Paul's comment yesterday. The geopolitical narrative is pretty clear right now, guys, where the U.S. has its back against the wall in order to retain not just world reserve currency status, but dominant world economic status. You know, that is going to be continue to be contested over the next decade or two with China, and we're seeing major allies like Canada, etc., that are willing to now start looking to China while the U.S. is being a baby at the negotiating table, you know. But in the same respect, the U.S. has to retain strength, or nobody's going to respect the borders. Nobody's going to say, oh, okay, well, we need to do trade with them instead of just continuing to do trade with China because it's cheaper or more feasible for whatever reason, you know. That's a very difficult place for the United States to be in. So I do not take the short-term buying back of our own debt because nobody else wants it as a bullish signal. Like, I don't really think that that is like a huge positive signal overall for the dollar, which may in the short term be a good thing for Bitcoin. But if the dollar collapses, that's not a good thing for Bitcoin, guys. You know, like that will end up having more than just the dollar effect on the price. I think it will end up kind of really damaging the market in a way that it would be hard for us to calculate in our lifetimes. You know, like we haven't really lived through like a fall of the Roman Empire scale event. So yeah, that is kind of like looming. That's, again, I talk about that more in the book at the website. That's kind of like the broader reason why we want exposure to Bitcoin, but we shouldn't be immune to the fact that sometimes it will have hard corrections, even if it goes to those higher targets. So I see a lot of people talking about how the bottom is in, like we're not going back to that price. And I think what they misunderstand is based upon, again, we're using what the chart has told us. We're using history, what it's told us. It's not necessarily going to repeat, but it does rhyme. You know the phrase. You know. So what I think is very likely is that we will return to the relative midpoint or slightly below it, even if we get another blow off top type event. It's hard for me to believe that that would be in excess of, again, about 106.8K, potentially the 115.6K Fibonacci pivot. But for the most part, I don't think it's getting higher than that before it needs to start tracing back in the opposite direction. And what I think is important about this is nobody could like claim that they saw the COVID crash coming. I guess unless you were, you know, a dock worker or something like that, you were paying attention to the shippings and exports at that specific time. But that was already weakening towards the middle of 2019. We had already had that interaction, and it had started weakening, heading back towards the midpoint by middle of 2019. So I don't think that it is unreasonable for us to expect the same type of thing. It may just be in a slightly different time frame. So it may just be slightly earlier. Again, I'm just thinking about logic. If I'm JP Morgan Chase and I want people to buy as many stable coins as possible, I would directly incentivize them by transactions, by how many they spend, instead of, you know, giving them yield. That's currently what the law says, guys. The law, that's what they're going to say, that it's to protect the small banks. That's why they can't have yield on stable coins. That's bullshit. What it actually is the U.S. government essentially needs new buyers for debt, and the only way for them to do that is if the stable coins have to be backed one-to-one with the U.S. dollar. So the bank, as an intermediary for you, for these stable coins, has to buy $1 US for every $1 US that you have in general. So they still need to maintain that. Even if you go and spend it on a car loan or whatever, they're happy for you to do that. That's what they're going to incentivize, is the amount of transactions, not you sitting idle in a bank as if it were gold or something else. They don't want to pay you that way because it's not real. They know that it's not real. They know that they're inflating it. That's the whole point, guys. That's what they're trying to defend. Okay, enough of the ramble. I'm so sorry. Back to technical levels. You guys love it. Also, tell me where you're from. I'm curious. I love learning about where people are from. I know I have people from kind of all over the world. I know I have some people from Australia, a ton of people from Russia lately, according to the analytics. I think probably just because of the news regarding Bitcoin over there. But welcome to people of all nations. I know a lot of you are American. Anyways, the two things that are important, guys, this is like 5 minutes ago that I started this thought and then got derailed. The two things, again, we've got the amount of green candles in a bear market year. So we don't have that many left. So again, we have one of two circumstances where either it is going to start breaking to the upside. We have logic and reasoning has left the building. We're just going to continue to go up until the stock market starts to correct. And in which case, I believe that's where we get our meteoric drop as well, is if the stock market itself starts to show weakness. If it does not start to show weakness, then Bitcoin will continue to trend higher until something else forces it to. Again, whether that is war or what have you. But I mean, the major institutions are building a huge short position against the total index. That's not a great sign of them thinking that it's going to continue to rise. JP Morgan Chase put out that report, I forget if it was yesterday or the day before, about the structural weakness looming in the AI trade. So I think that at some point in the next, say, 3 to 6 months, that will start to correct a bit, and Bitcoin will, whatever trend it's building now that could potentially be to the upside, I think will be reversed at that time. We see a little bit of evidence of that over here in 2022. So I'm not in the camp that the 2022 fractal has mattered as much to us. Again, subscribers are already aware. I talked about 2018 in every video for a long time this year, roughly until July, where it started to break down. Towards the end of July, it started to be no longer useful to us, and I really have not brought it up as often since then. So I've heard some people talk more about how the 2022 fractal was more similar. I'm looking at it now, though. I don't know what the hell they're talking about. That's not correct information. That's why I created my own channel, guys, so I can hold myself accountable to what does the chart tell me instead of what TikTok and Instagram tell me. But so far, I'm not really seeing that be the case. Very different circumstances as well. Interestingly enough, not totally different narrative. So 2022, obviously, for any of you who are back in the crypto market those days, that's when we had BlockFi, Voyager, Celsius all go out of business before FTX ended up going out of business towards the end of the year as well, causing the final capitulation for price. But the bulk of the move had already happened by June. Most of the move had already happened by June, and we just had a bit of consolidation before the drop. So again, I think we're probably more likely just speeding up the 2019 fractal, where we're getting, this is actually, I kept wanting to say this and I did not get to say this. So the other thing we have to pay attention to with the monthly SMA is typically it's a period of about 7 to 13 months that we are disconnected from it. This is that 7 months right here. Maybe 8 months? How do you do math, Jacob? 8 months. So forgive me, 8 to 13 months roughly that we can be disconnected from the monthly SMA. We are on month number 9 now. So we're already past the expectation for that time period. But what's important to pay attention to about the shape of that, it's the same in both circumstances, where we have the relative bottoming event itself, a consolidation period, and then on the opposite end, the candles try and subsume the body of the candle that was the drop. So in this case, that took multiple months in 2022, 2023, whereas it only took 3 months in the 2019 cycle. So what remains to be seen is if we're going to see the same thing now, where again, we've got maybe 3 more months, maybe 4 more months before we would expect an interaction with the monthly SMA just based on the historical analysis. So broadly speaking, that means price is going to trend up, not down. That's what the chart itself tells us, barring a major rejection here that forces us back down and again just extends the amount of time that we have before reclaiming the monthly SMA. It is important to note that we broke the monthly SMA way earlier than usual. We broke it in November of last year. Typically speaking, we would expect to break it either early in the bear market year or in 2018's case, it was late. It was like October, guys, that we actually broke it. So there is some credence to the possibility that we are just going to start trending higher. It's not my base case, primarily just because I think people aren't really, they're not really thinking about what it means that the U.S. government has to prop up the Japanese dollar, and that our trade agreements with our most trusted partners are kind of failing. To me, sure, maybe short term Bitcoin benefits from that, but I think combined with structural correction in the stock market, and just the general trend of like moving away from dollar dominance, I don't think that that's like positive for the price of Bitcoin forever. There, at some point, the macroeconomic factors I think will pull it down again. It's just whether or not that is before or after another run to 100K. So this end of that tirade is mostly, I just wouldn't be afraid, guys. If you're somebody who is newer to the market, which I don't think is the case for most of you, I think most of you that are listening to me ramble for this extended period of time about detailed positions around the price, you're probably a little bit more into crypto than the average person is. You're probably a little bit more invested in your own understanding than somebody who just broadly wants knowledge about meme coins or number go up philosophy, you know? Like this, you want to have a more technical mindset about it. I wouldn't be that panicked, even if the price goes up about 100, about never having another opportunity to buy lower. It just probably won't be at the cost basis you wanted. If you wanted, say, 44K or lower, that will pass us by if we have a move to 100K plus. I just don't think that a move back to 64K is off the table if we have a move to 100K plus. I think that the chart actually tells us that's highly likely, as well as who was the president in 2019, guys? Donald J. Trump. So to me, it's still a very high likelihood, given that we are currently being run by an oligarchy. That's how oligarchies make money, is off of unpredictability, as opposed to a socialist regime where it's kind of like easier to telegraph what's going to happen because they want everybody's friends. You know, everybody wants to have predictable trade markets. It's not my opinion, by the way, guys. That's like a CIA director. It's like, that's his opinion of how those global economies structures work. So I'm taking it directly from somebody who knows a lot more about it than I do. But anyways, broadly speaking, we have to acknowledge that we are going to, within the next 3 to 4 months, start trending back towards the monthly SMA. So that either means that the monthly SMA itself is going to continue to come down towards us, which I do generally think is going to happen. I think that it would come down more sharply if we start to trend down next month, which is still my baseline expectation. Again, if we only have 3 to 4 green candles in a bear market year, then we got them all. We got all of them. Technically, we collected all of the Pokemon badges we can now go to the Elite Four. That's kind of the point, is we wouldn't expect any more of them, but that would be where we see our major divergence, where for whatever reason, we just continue to climb into September, which is not impossible. I think what would really change that is if they do not pass the Clarity Act. All this time of them like saying, we're going to pass it, we're not going to pass it. Specifically, again, the SEC stuff is important, the CFTC stuff is important, but it's not the same thing as tens of trillions of dollars flowing in with the stablecoins and a decent portion of that flowing into Bitcoin. Everything that I've heard from the CFTC and SEC stuff is like, they're talking about tens of millions or hundreds of millions, even potentially tens of billions worth of inflows. That is not the same thing, guys, as $5 to $10 trillion over the course of the next 5 to 10 years that will trickle into Bitcoin directly. So for me personally, that is the important narrative. The other stuff is like important for whatever, for Wall Street and for professional traders. It's not important for somebody who is like just trying to have exposure to the broader trend. I am not convinced that the broader trend is here yet. I will have to concede that I'm incorrect about that if we start to get consecutive, I would say weekly and daily closes above 83K. It wouldn't necessarily bother me if we get a like 1 or 2 weekly closes above 83K. It would be a change in structure. We would have to acknowledge that we may no longer be in a downtrend, or at least a much less steep downtrend than we were. That would, again, still put bias towards the upside. But I would be very surprised if we start getting multiple candle closes on the monthly time frame above 83K. And obviously, I will continue to make videos like 6 days a week during that entire time period. So it won't be the last time you hear me talking about it. Let's go to the daily, weekly time frame. What am I talking about? Weekly time frame. So same story on the weekly time frame as on the lower time frames, where we have an interaction with the middle band of the downtrend anchor VWAP, which, just a reminder, guys, for anyone who doesn't know already, go underneath forecasting, go down to volume-based anchored VWAP is the squiggly line guy that I'm talking about, as well as the anchor volume profile over here. Very important. Those are the 2 primary tools that I use. Everything else I use as an indicator. Guys, I am still at this current time using a free TradingView account to give all of this analysis to you. Do not overcomplicate your system. You do not have to do so. You can get a lot out of just paying attention to the basic indicators. One of them is literally volume. Anyways, so we've got that rejection there off of the weekly time frame. I think that that's pretty important because, again, what does it do Same as the weekly SMA. What does it do with the weekly SMA, guys, during a bear market year? It rejects it. What does it do even more clearly so far on this downtrend anchor VWAP, which again, I don't have one drawn for previous cycles, so I can neither confirm nor deny that this is normal, quote unquote, for what it does in a bear market year. But broadly speaking, what has it done? It's had wicks that did not quite go above it. And this is our first instance where we get a wick above it, and the body of the candle is still below it. So what we're going to want to pay attention to, I said this in the email for the daily close, but this is also going to be the case for the weekly close. If the price can close above 79.4K, that will be a divergence. That will actually have some credence towards pulling towards the higher price, which again on the weekly time frame is about 94.9K. Let's call it 95K, just because it's a little bit easier. And broadly, that 96K Fibonacci pivot, which I had not talked about since like January, guys. Oh my God, the 96K Fibonacci pivot has long been past us. I do think it'll be important again if we get that upside move towards 100. 96K would be one of the major stopping points or potential pullback points at that time. But I don't know necessarily that we'll respect it. But it could be very similar to this guy here when we passed 76.3K initially. The difference being, again, the middle band of the downtrend anchor VWAP at that time was above this pivot point, whereas this one is starting to break below it. What does that mean, Jacob? What are you rambling about? So what that means is these are two key events. So what we saw is it didn't have much resistance on the first event, but we have had resistance on this second event, which actually calls into some question about, okay, well, is the price ready to pass through this magnetic barrier, or does it need to go break through this concrete wall and actually make a retest towards the middle of that range? Which, what is it, guys? You already know, 70.3K. Very, very important. The weekly SMA itself has rounded up towards about 69.9K, call it 70K, by the time that we actually interact with it, most likely. And that's pretty much what we're waiting for right now. Bitcoin, patience, the companion of wisdom. We're waiting to see, okay, well, is the price ready to formally reject the weekly SMA, or sorry, the middle band of the downtrend anchor VWAP and head back towards the weekly SMA? Or do we try and see how many more weeks we can get out of this interaction? Which again, going by history, guys, we have two instances where the price had an elevated time period above the weekly SMA, and one of them just happened. So we had about 6 weeks above the weekly SMA between April and May. That is the second longest time period on the chart. The first most being in 2014 was about 12 to 13 weeks. During the time period where the IRS was trying to decide if Bitcoin was property or not, spoiler alert, it's property, guys. The price still rejected really hard off that. So I would anticipate this as a similar thing where it's quite possible that the Clarity Act passes and the price still sells off after, you know? It's quite possible that the Treasury news hits and initially the price goes higher and it still sells off after. So again, just specifically for anyone who's like worried that they're not going to be able to get into a larger spot position, I just think you need to be patient. You may end up getting another attempt to get in at the midpoint level like next year, you know, and that's something you have to be reasonable about. I think that's why I personally have pivoted so hard towards trading instead of just investing. Is the investing thesis is like there's gonna be long time periods where it's boring and you just need to be DCAing. Broadly speaking, I would say that's not financial advice, but anytime we're below the weekly or the monthly SMA, currently we're above the weekly SMA, so don't worry about it. Wait until we're back below it, and then you can start DCAing again, is how I think about it. Like, you don't really need to be more complicated than that. But as somebody who is trading leverage, which a decent amount of you are, especially if you're listening this late in the video, I would be more focused on just identifying the trend. You gotta be flexible about what the trend is and not be precious about it. You can't have emotions tied to it, you know. I'm not currently in a trade right now because Coinbase has something called what do they call it? A reconciliation fee or something like that. Basically, my balance is way lower than it should be, and until they explain to me why, I'm not taking any more trades. So I'm just kind of waiting to see how that plays out in alignment with what the chart is telling me right now, which again, what the chart is telling me right now, I think I am biased towards the downside. There are so many narratives that could contradict that and continue to pull us higher. So for me, it's not quite ready. Oh, it does look like it's heading a little bit higher on the 15-minute time frame. I talked about this earlier in the 4-hour break room briefly, that it looks like it's starting a slight uptrend on the lower time frames. Not confirmed of a breakout yet, but it is attempting to to get to that breakout now. Again, guys, if you want up to date what I'm thinking throughout the day, the best place is in the 4-hour break room. There's a trial membership right now where you can get in for cheaper for the first 3 months. Go check that out in the link in the description down below. Only available here in the YouTube videos as well as the emails if you're subscribed on the website, bitcoinescapeplan.com. Go check that out. But yeah, broadly speaking, if you want access to my thinking besides this one YouTube video a day, as things are happening. Guys, sometimes I will literally post at like 1 o'clock in the morning, like 3 o'clock in the morning if I'm up and there's something important happening. That's why I'm building the membership, is so that I can hold myself accountable to my own trade plan. So if that would be helpful for you, check it out. As well as the Discord in the comments down below. I would like more people to get in there. And we could just kind of talk more about the price generally outside of, again, the YouTube comments. But yeah, there's not that much going on in the free Discord. But if you're somebody who's been following me for a while and you just want, more connection with other people who follow me, that's the place to do it. Go to the comment down below, the pinned comment. Anyways, rambling. So we want to pay attention to 79.4K specifically for the weekly close as well as the daily close. So very important for the daily close, very important for the weekly close. How close are we in relation to that? If we close below that on the weekly time frame, that being Sunday, I would think it puts more likelihood that we are going to want to test back towards 77.7K and 76.3K. Totally possible that we have a bounce off of 76.3K to the upside, but I would think that it is fairly likely at that point that we're actually going to want to, at the very least, make another attempt for the weekly SMA. So actually, I'll go try and look for an example of this on it's literally just the 2014 timeline and the 2026 timeline. This is the only two instances that we have, guys. So this would be our bull scenario, would be if this week still closes well above the 76.3K Fibonacci pivot, as well as well above wherever last week's close was, which I don't remember offhand, so I'll go take a look at that in a second. But that would be our best case scenario, is that we would have 2 weeks consecutive before still needing a retest after that. Now, it reclaimed that retest, it stayed above after that retest, but again, we would kind of expect that it will just naturally want to, at the very least, check the weekly SMA. And you can see in those preceding 2 weeks, it doesn't get that much volume to the upside and then retests again. It doesn't have a full retest, just kind of reclaims it at that point. So that's what we want to be paying attention to essentially over the next couple weeks. I think it's going to be messed up, guys. I've said this for the last month or two. I think that this 2 to 3 month time period is the hardest trading time period of the entire year. Everything else I talked about all year, pretty easy. It was copy paste from 2018, very, very easy. I don't think it's going to be the case until probably the end of September, potentially October, for us to not be flying blind, as we keep referring to it. I think it's just as likely that it continues to be erratic, essentially, and harder to predict, which again, that's why I made the membership, is 1, so I can hold myself accountable to the major swings, and 2, so I can discuss it more openly than just here in the YouTube videos, where it does not make sense for me to make more than 1 YouTube video a day, guys. like I'm still having a hard time growing the channel at the size that it is, which again, share it with somebody else who knows crypto or who likes Bitcoin. I really pride myself on trying to give accurate analysis on a daily time frame. Yeah, help me out. You guys are great. Anyways, what are we looking at for levels besides that? Like I said, 79.4K. Let's go back to the daily time frame. Rambling today, guys. Rambling. I really think it comes down to that middle band of the downtrend anchor VWAP. That's it. It's that 79.4K level. So both on the daily time frame as well as by the weekly close. If we continue to get rejections here, it's going to pull us towards the next most important point, which on the daily time frame, we don't get new Fibonacci pivots until September 1st. So whatever, 5 days from now, we'll have new Fibonacci pivots where it'll tell us. If we're just going by older ones, then, oh, look at that, my beloved 76.3K. 76.3K is an older one on the daily time frame, as well as, of course, being on the monthly and the weekly time frame. So I would still say broadly, that's the most important 3 levels for us, is 79.4K, 77.7K, and 76.3K, my beloved 76.3K. And given again the context of what I said, that we have about 5 days left until the monthly candle close, I would think that that's where we get our little pullback towards 76.3K, is over the following 5 days, which again could completely change depending on how Bitcoin interprets the Nvidia earnings. And then Jackson Hole on Friday, again, could dramatically change that. But that's broadly what I would be paying attention to. So I wouldn't expect like a huge drop to the downside yet. I would expect mostly consolidation between now and the final 5 days of the month. And then logic and reasoning tells me that the first thing that we would do is try and test a sell-off at that point. You know, like that's the first thing that would happen, I would think, over the first couple of days of September, which this was the case in 2019. I don't think it's necessarily relevant to us now. We are in a different regime than then. But 2018, sorry. 2018, September 4th was our peak of that relative range before price started to reflect back to the downside. But combined with the Treasury starting to do buybacks on September 9th, now to the tune of $950 billion instead of an extra $4 billion per auction, which is pretty sizable. It may actually be the same number, to be honest, depending on how much they were committing to each auction in the first place, which I don't remember the exact math on that, but I would assume it was already going to be to the tunes of hundreds of billions of dollars. So it's just specifically 950 billion instead of 486 billion or whatever, you know what I mean? So that is important. That will again have a short-term effect on the price where maybe it still spikes up a little bit based on that news. And then the Clarity Act vote again being September 15th in the Senate. It's very hard for me to believe that the price is going to rally higher if they ultimately vote not to pass it, because then it's definitely not going to get done before the midterms. And the Kalshi and Polymarket odds for it getting passed before the end of the year are basically going to completely bottom out. And we won't really hear that narrative become important again in a price perspective, I think, until next year. Which again, I don't think is necessarily the best interest of JP Morgan Chase. So it's harder for me to believe that that is the case because they run the world. So I really think whatever is best for them is what's going to happen. So I was leaning towards Clarity Act's passing. You guys know if you listen to my older videos, that was my case. I still think it's going to sell off regardless, but it really seems like it's not going to now. And I do think that that is a more important narrative than them continuing to say that the U.S. is going to buy, because they might write into the law that the U.S. doesn't start buying until like 2028, you know. Like they may take them like a really long time period where they deal with the custody and the partnerships or whatever before they actually commit to it. The same way as, you know, the Genius Act doesn't go into effect until January 18th of 2027. And they enacted it into law like last July, you know, like a long time ago. So yeah, these things take a long time. Bitcoin, patience, the companion of wisdom. So if you're trading leverage, that's what I would be focused on, is over the next 5 days, we're going to get the monthly close. What the monthly close tells us in relation to either a rejection or acceptance of the middle band of the downtrend anchor VWAP is, again, it's going to give us some evidence to whether we head back towards the upper band, which I do not believe is going to happen on the monthly time frame. Again, I would be very surprised if that happens on the monthly time frame, because again, we will have to break through the monthly SMA on our way there. And our biggest points for that is either we have an instance like 2023 where we briefly broke above it and then still gave it back up before heading higher, or like 2018 where we just rocketed right past it and then later had a reclaim of it. So in either circumstance, we would expect a reclaim to the downside of the monthly SMA after breaking it. We just have to acknowledge that it is possible, it is increasing in possibility with geopolitical instability, that we could actually get that meteoric rise earlier. I would just, again, expect it to potentially top out at 96K if the news stations really want to harp on that 100K narrative, or I would expect us to head back towards that 106.7K and 115.8K targets that I talked about earlier. I think I said 115.7K, but whatever. Sue me, guys. Sue me in the video, in the comments. So that's what I would be paying attention to for leverage over the next couple days. And if you're somebody who's just trading spot, guys, don't worry about it. Like in general, I think about Bitcoin as my retirement plan. I'm going to continue working for the next 20, 30 years, whether it's continuing to do parkour or music or whatever, separate from this Bitcoin channel and whatever job I need to pay my bills. I'm just going to continue to do that alongside continuing to trade. But focusing on the trading, I think, and getting a better edge on this one specific asset, I think is going to be very, very helpful to me and everybody else who's paying attention to this channel. So I really think about like it's a piggy bank. The rest of it is a piggy bank. Do not be concerned about it. Say thank you when the monthly and the weekly SMA present you with an opportunity to DCA, and that's it. Don't worry about it, guys. For me, there is no reason where even if we get a rise past 100K that we will not retest back towards 64K at one point. I'm sure I will be arguing with a lot of people on Threads about that for the next year of my life because everyone thinks that we're going to go higher and we're never going to go back lower again. But that's not what the chart tells me. That's not what the fact that Donald Trump was president at that time tells me. And it's not what that tells me about how oligarchs make money. Oligarchs make money off instability and a lack of accurate information being available to the common people. So back to the 4-hour time frame, and then I'll get out of your hair, guys. I have no clue how long this video is today. Doesn't matter. We're just going to power through. So the two middle bands, we have both the downtrend anchor VWAP as well as the elder VWAP. The elder VWAP, again, being the one that is drawn from 2011, the downtrend being the one drawn from the 126 all-time high. So we have, at the moment, we have broken above the downtrend one, and we have seen a clean reclaim of the elder VWAP. So that is important to note. This is the older one. There's way more price data in this. Literally like 7 or 8 years worth of more price data in this one compared to this one. So I do think it's very important that we're seeing, okay, initially it is still holding strength above this one. What does that mean? That means we will trend towards the next important one, which technically speaking is this guy over here at 95.2. But I don't think that's going to happen. I think we're going to get stopped before that, which again would be confirmed by that 79.4K target. Is if we get close to there again and show some resistance there, that's when I would think we would have a more meaningful test to the downside, because we would just be seeing, same as how I always talk about it, guys, with the, it's easier to illustrate this on the weekly time frame. I talk about this all the time, how I refer to that 70.3K point as like the relative midpoint of that range. And how I think about that level is when the price is above that level, it puts pressure on the price towards the upside of the range, being 76.3K. It asks the question of, can the price get to 76.3K? And to the same regard, it asks the same question of if it's below 70.3K. Can the price get to 64K? And don't just listen to me saying this. That's what the chart did. You know, that's what the chart actually did at that point. So I was calling out that as it was happening in videos, but that's what the chart actually did, guys, is it got to around that midpoint and then decided, oh, I can't stay above this, and then it started to reject towards that other target. So I think about that broadly the same way for where we are with these. It's the same pivot, it's the same 76.3K pivot, and we just have to accept that the range is a little bit tighter as we're going on to the 4-hour, and you just have to be able to extrapolate between, are we in a breakout period where obviously, so you guys can watch this video at the very end of this, my Bitcoin Advanced Trading course, where I go over in detail my kissing candle strategies, the best strategy for mean reversion trades on the Bollinger Bands that I've found. I back tested this for like a year and a half, you know. In my opinion, this is the best. I have started developing one for the 15-minute time frame as well. I'm not going to make a video on about that, guys. That would be a full-time job for me to give you all the updates on the 15-minute time frame. Once I have more people in the 4-hour break room, we could talk about the 15-minute break room. But for now, we're just focused on the 4-hour time frame. The 4-hour time frame does not behave the same way if we are in a period of breakout versus consolidation. So technically speaking, while we're in this period of consolidation, as I said on Monday's video, that was the entry for a short period, and there's been no reason to close it. So I was getting greedy, I was looking for scalps and such, but technically speaking, that short that I opened on Monday, there has not been a reason yet to close it. I do think we are going to reclaim above the 4-hour SMA, which again, I said this right before I started recording in the membership, and I will continue to talk in the membership throughout the day and tomorrow as we see major updates with that. But broadly speaking, I would expect a reclaim of that, especially given I think the NVIDIA news is going to be positive, and I think whatever they say with the government data on Friday, the market will react to it. So whether that's a violent move to the downside or a sharp uptick to the upside, I don't know. But what I do know is it will be volatile, and where we are in relation to that 4-hour SMA will be important at that time. That level, again, being about 78.5K. So what are the levels that I would pay attention to? I would pay attention to 79.4K. If we can get above that, I would pay attention to 79.7K, that being the 4-hour Fibonacci pivot level. I would pay attention to 78.5K, that again being the 4-hour SMA. Let me double check what the daily SMA is real quick. I think we're way above it though. Yeah, we are way above that, boy. So eventually we will have to trend back there. typically we can spend about a month disconnected, 3 to 4 months disconnected. So this is just me spitballing, but I would imagine we probably don't get a retest of that until that September 15th date. So it's possible again that between the 9th and the 15th that we start to see a downtrend. Maybe maybe the market factors in the treasury buybacks earlier now that they've had the information, and the bulk of whatever volume that's going to come into the trade is kind of front run, and then the opposite happens, like the sell the news event starts on the 9th into the 15th, confirmed by, again, if weakness of the Clarity Act or the Clarity Act does not pass on the 15th, I don't care where the price of Bitcoin is, guys, it's going to sell off at that time, just because altcoins will sell off at that time as well, and that will put more pressure on Granddaddy Bitcoin itself. So I wouldn't necessarily expect the daily SMA to be quite as important as the 4-hour SMA, so I would pay closer attention again to that 78.5K level. Also, guys, it's totally retracing that 15-minute time frame that I was talking about. This is why you be careful about the lower time frames, because they can change on a dime, especially if you're hearing these videos late. So if you want up-to-date analysis, it's in my membership, the 4-hour break room. You can ask me questions on Threads and Discord or whatever throughout the day, but if you want me only giving my opinion when the chart is telling me it is important to have an opinion, that's what I built the membership for. Anything else you need will be on the website, bitcoinescapeplan.com. I'll talk to you guys tomorrow. Again, 77.7K would be what I'm paying attention to the downside, and as well that middle band of the elder VWAP is 77.5. So not quite as important as 77.7, but I do think that will also be important if we start to show weakness there and start tagging there. It makes it more likely that we're going to show resistance the next time that we interact with the upper, or rather the downtrend middle band of the anchored VWAP. Questions, comments, concerns, leave them down below. I'd be curious to hear where you guys are from, or just generally what you're thinking about the markets right now. Always fun to chat. I'll talk to you tomorrow. Have a wonderful day.